Good afternoon, everyone. My name is Nick Santiago. Thank you for being with me this afternoon. A lot of members have been recently emailing me about the upcoming seminar, comprehensive seminar that we're going to do on moving averages. I will be presenting this seminar on September 11th at 7 p.m. And a lot of traders are saying, Nick, what are we going to get in this seminar? Is there something that I don't know yet? What are we going to cover? And I just wanted to give you guys a brief outline of what we're going to cover and show you a few charts that we're going to be looking at, just to give you a little inside glimpse of what the seminar is all about. Now, this is going to be the most comprehensive seminar that I've ever done on moving averages. And one of the reasons why I'm doing it is so many traders have been asking me recently. They say, Nick, is this moving average major or minor? Why are we taking this level? Why aren't we taking this level? And I think traders just have really forgotten about how simple the markets can be when presented on the charts. And again, moving averages are one of the most important factors on a chart. If anybody's ever taken the In the Money Stocks methodology course, which I cover moving averages in there, you'll see that I spend over an hour of the course. It's about an 8-hour course. I spend over an hour's time working on moving averages. So I think it's very, very important that traders really understand what moving averages are telling us. Again, they're just one important factor to many factors, but moving averages occur on every time frame. Therefore, we can use them almost every time we look at a chart. So let's go over why moving averages are so important and what we're going to learn in this upcoming seminar. Number one, identifying the trend with moving averages. You'll notice that every chart has a trend to it, and a lot of times it's hard to read the trend, but we're going to discover how you can always figure out what the underlying trend is in each particular stock, equity, doesn't matter. All of these moving average techniques can be used on ETFs, can be used on stocks, they can be used on commodities, they can also be used on Forex. So again, it's going to play a very, very pivotal role in everything you do, but just understanding the trend using moving averages. Number two, learn when a moving average is major or minor support on a chart. I mean, that's probably one of the most important things for most traders. I can't tell you how often I see traders say, hey, it came down to this moving average, but it blew right through it. Why did it do that? And most often I can really just pinpoint it in just a second and say, hey, didn't you see this pattern develop? And this is why this moving average did not work out. So we're going to cover that also. We're also going to look at number three, putting moving averages together with chart factors to increase the odds of a winning trade. Very, very often a lot of traders will say, hey, I'm going to take this trade because it's hitting a moving average, or it's going up into resistance, I'm going to short this particular stock. But the reality of it is you need more on the chart to really give you a winning trade. It's always called factors, and we want to stack the odds in our favor for every trade that we take. You just don't want to take a particular trade because it's coming down into a moving average, or the stock may be moving up into a resistance point that is a moving average. You really have to stack the odds. You have to know what you're looking at. We're going to put it together with other factors on the chart to increase the odds of a winning trade. Number four, understanding time frame analysis when using moving averages. Again, you have so many different time frames. You could look at yearly charts, monthly charts, weekly charts, daily charts, 10-minute charts, 15-minute charts, hourly charts. There are so many different time frames out there, but the reality of it is they're all fractals of each other, and we're going to put it together when using moving averages, when those moving averages will be important, when they're going to be critical, and we're going to talk all about the different time frames. We're also going to cover understanding moving average crossovers and what they tell you about a stock. Years ago, when I was really just getting into this business in the early 90s, I used to take one trade and it would look for a moving average crossover when I first started to use charts, and I would just buy that stock. And then I would lose money and I'd say, hey, but it crossed over. Nowadays, I figured out why not all crossovers are going to work and help you make money. So we're going to cover all the myths about moving average crossovers. We'll cover that, and we'll tell you when they are very, very important and what they will tell you about a stock. Number six, we're going to learn about the bow tie formations and their importance. Some of the best trades I've ever had in my life had to do with bow ties on the chart, and I'm going to show you what a bow tie is and how to use that to make money. Next up, we're going to talk about number seven, trading the tag and tank and drop and pop patterns. These are probably two of the most lethal patterns in the business. I've been using them since the start of my career. We've been using them here at In the Money Stock since our inception in 2007, and they still work with a high degree of accuracy to this very day. So I'll teach you how to use the tag and tank and drop and pop patterns. Many of you that are In the Money Stocks members already have been using this trade forever, and you could still say today that this trade works with a tremendous high degree of accuracy. Number 8, discovering the moving averages that the major hedge funds and other institutional money managers are using. That's what moves markets. It's not me as a day trader moving a market. It's not you as a day trader moving the market. It is the institutions that move markets. Guys that go in and buy millions and millions and millions of shares, and they have their other hedge fund buddies do the same thing. That's why you always want to take a look at the major moving averages out there that the institutions are using, and we'll talk about that and much, much more. Now let's get into some charts here, and I think you'll find this pretty interesting, what we're going to be looking at. I'll just give you a sneak preview of everything that we're going to cover. Here's a chart of Lockheed Martin. Notice the trend. Here's your crossover. Notice how the trend is up. Look at the move that this stock has made. It's gone from $80 in 2013. It's over $300 a share today. So again, big move. You could see a surge, and you could see these moving averages. I have them all outlined here for you. Look at another one here. This is XLE downtrending, and this is an hourly chart. You can see the different type of different time frame, but very similar type patterns, and this occurs all the time in all equities. So again, there's really nothing new under the sun. Well, look at the trend in XLE. Look at the moving averages. It is just clearly telling you what the trend is. So again, we're going to be looking at that. Here, take a chart here of Jacobs Engineering. Note, look at this bearish pattern right here, but the stock held the 200-day moving average or the 200-week moving average. Why did it hold it there? And I'm going to show you how to put that together. Why things always don't play out the way most people believe they're going to. But again, you have to understand the other factors on the chart. Here we have a chart of Twitter. What is the trend in this stock? I mean, look at this thing. It's all over the place. It looks like an EKG. You can't really make much out of it, but I'm going to show you how to find the trend in Twitter stock. And again, this is something that we'll only cover here in this webinar. Next up, you get a chart of Mylan. Take a look at Mylan Labs. Is this 200-day or 200-month moving average going to be major or minor? I'm going to cover that for you, and I'm going to show you. A lot of traders absolutely have no clue what's going to happen when this hits this 200-day or 200-month moving average. Next up, we'll take a look at one more slide here. This is a chart of Chevron. This is an actual trade that we did here at In the Money Stocks back in 2015. Stock came all the way down to the 200 moving average, pierced it, and look at the rebound. The stock went from $70 all the way up to almost $120 in a year's time. So again, this is just something that we'll cover. Was this moving average major? Of course it was. How do you put it together with the other factors? What's on the chart there? And again, this is just a lot of what we're going to cover and just a little bit of a sneak preview. All right, with that being said, I'm going to keep this video pretty short and brief. I want to wish you all a great trading day. Remember, the moving average seminar is coming up on September 11th. That will be done online. It is a 7 p.m. event. Expect the webinar to last approximately 2 hours. Depending on the size of the group, it could last a little bit longer. With that being said, everybody, have a great trading day, and we will see you on the charts.